What's your financial goal?
You want more money? Turn what you know into dough. Start hanging out with the people who have it. You create wealth on your own terms. It is not only your rights, but your duty to build wealth.
You are fiscally fabulous.
It's time to enjoy your legacy.
You're listening to Fiscally Fabulous with Dr. Teresa R. Martin, Esquire, a podcast that aims to provide you with the tools, guidance, and encouragement you need to build your wealth, enjoy your wealth, and leave a lasting legacy. Dr. Martin is an accomplished attorney, speaker, business consultant, and real estate strategist, an all-around self-made success who provides highly sought-after expert consulting in the creation, growth, and maintenance of generational wealth.
Hello, everyone. On behalf of Dr. Teresa R. Martin, Esquire, my name is Chrissy, and you're listening to Fiscally Fabulous. Credit scores. We talk a lot about them when it comes to our personal finances and debt management. A good score is critical to your ability to borrow money in order to buy a car, a house, take out a loan, and other such large expenses. Find yourself struggling under a mountain of crippling debt, and your credit score is sure to tank. Which can certainly make life hard. Maintaining a good credit score is essential to staying above water financially. But it's not just in your personal finances where we need to be concerned about your credit score. Your company must have its own business credit scores. In this episode, we'll address some of the myths while highlighting important facts about business credit scores and how they can play a crucial role in growing your business. You probably noticed a moment ago I said scores. Yes, your business likely has several different credit scores, and these are typically calculated based on a number of factors, namely the type of business you run and whether you make your payments on time. Maintaining a healthy business credit tells financial institutions, vendors, insurance companies, and others that the risk of working with you is low. Hoping to establish a positive relationship with vendors or lower your business insurance premiums? Strong business credit scores can be your best friend in these situations. Even if you have no intention of taking out a loan, it can still prove a huge relief just knowing your business credit is in good standing. This will give you a better chance to secure a loan should you urgently need it. Business credit scores are a widely debated topic as to their use and what they really mean when it comes to obtaining business financing. Prior to the financial system crash of 2008, there were very few business loan providers or business credit card issuers who cared or even checked business credit. Today, things have changed. The main difference in business credit today is that most banks, business credit cards, and major business lenders are reporting small business credit histories. They are also checking business credit reports before making approvals. This means that you, as a business owner, must pay attention to your business credit scores, just like you do to your personal credit scores. But hold on. What, in a nutshell, is business credit? Business credit is both a record and a measure of financial respect for your business based on the company's previous record of fulfilling its financial obligations. Since the ability to secure loans and other means of financing is tied to your credit, in many ways, your business's chances of success hinge in part on how well respected it is financially. But before we go any further, it's important we confront some of the misinformation about business credit scores out there because it's led to some rather unhelpful myths about them. So, what are a couple of these myths? Myth number 1. Business credit scores can replace personal credit scores and can be used to obtain large amounts of financing without anyone ever checking your personal credit. This is probably the biggest scam going in the business credit market. It is used to separate you from your money. They claim that if you will pay $2,000 to $5,000, then you will have perfect business credit scores that can be used like magic beans to get whatever you want. The old rule applies here. If it seems too good to be true, then it is too good to be true. Myth number 2. Business credit scores are worthless. No one will check or care. Business credit scores are now being checked by most business loan providers, business credit card issuers, equipment leasing companies, and vendors extending credit lines. They are even being checked by SBA lenders to determine approval amounts, repayment periods, and interest rates. Business credit card providers are using them for approval amounts. Okay, so we've established 2 of the most common myths floating around about business credit scores. But what do we know that's true about them? Here, for starters, are a couple of facts about business credit scores. Fact number 1. Your business credit scores will have an impact on your business. With landlords, insurance companies, security companies, and many other service providers now checking your business credit, your business credit scores are going to impact your business, even if you're not seeking a business loan. Having business credit scores at or above 70 with all 3 major business credit reporting agencies will play a role in things your business will or will not be able to do. Your business credit scores will also impact the number of times that you will have to sign personally for things your business needs. Fact number 2. Obtaining good business credit scores is just as much work as obtaining and maintaining good personal credit scores. Nothing in life worth having comes easy, and business credit scores are no exception. Optimizing your business credit scores requires a 1-3-5. This means that you obtain at least 1 bank or major account loan, such as large equipment lease, 3 business credit cards, and 5 vendor lines of credit. Then you have to use them month in and month out, and that you pay them on time. It is the same concept for obtaining good personal credit scores. Please be aware, though, if you are out there on the web and someone tells you they can obtain hundreds of thousands of dollars for you by using only business credit, and no one will care about or even check your personal credit scores, it is a complete scam, and you should run. Personal credit versus business credit. While both your personal credit score and business scores can share a similar purpose, such as establishing your risk level when it comes to obtaining loans, there are some key differences you'll need to take into consideration. Now, you've probably heard that you can access your personal credit score free once every 12 months. Unfortunately, this is not the case for your business credit scores. To see your business credit report, you'll need to pay. And unlike your personal score, which only you and select persons are permitted to see, your business credit report is public information. Right now, you may be wondering, I've already got a personal credit score and it's pretty good. Can't I just use that to take out a loan for my business? Sure you can, but it's not advisable, at least not over the long term. In fact, some experts would say the best time to start your business credit is as soon as your business begins. Of course, not everyone does this, and if you're a new business, you're probably still using your personal credit in order to take out loans. And assuming this is working for you, again, it may have you wondering why bother to establish a separate business credit to begin with? Let's take a quick break, and when we return, we'll dive deeper into the topic of business credit. I am Fiscally Fabulous. Transform your business from the inside out with Dr. Teresa R. Martin. The Fiscally Fabulous community and coaching programs are a real game changer, and not just because it produces radical results fast. We're community-focused, results-focused, and fun. We're dedicated to helping entrepreneurs like you obtain business credit, loans, and credit lines to start and grow, whether you're a new startup business, existing business, or have good or bad personal credit. Start today by signing up with the Build Her community. Spark the beginning of major change for your business and your life. Visit buildher.enjoyyourlegacy.com. So let's take a moment to address this question. Why do you need a business credit score or scores in the first place? Let's face it, no matter how strong your personal credit is, odds are you will need at least a small business loan at some point in the lifespan of your business. Having good business credit scores will increase your chances of obtaining that loan or line of credit at favorable terms. Need another reason to consider to establish your business credit? How about lower rates on insurance policies? And arguably, the best incentive is this. It will allow you to keep your business and personal finances separate. Doing so will make it easier to keep track of your business expenses, keeping them from getting tangled up in your personal expenses. And here's the icing on the cake. Come tax time, it will make things much easier for you. In addition to saving you from being mired in complicated taxes, separating your personal credit from your business credit can also protect you. Let's say you've missed a few credit card payments on your personal account. Should your personal and business credit still be linked, these missed payments won't just affect your personal credit score, but they'll affect your business one as well. By separating them, how well or unwell you manage your personal finances won't necessarily have an impact on your business's financial profile. Once you've reached the point where you feel it best to separate your finances, just be sure to start by setting up a business bank account and keep your books separate. So let's say you're a small business just starting out. You're small enough that you still have not yet made the transition over to establishing a separate account and credit score for your business. This means, of course, that everything is still in your personal name. And like any new business, you need financing to reach that next crucial milestone. Maybe you need funds to hire a team, lease an office space, or purchase an expensive but ultimately necessary device in order to complete your work and satisfy your clients and customers. Whatever the reason, this moment is sure to happen at some point during the growth of your business. And here's why having that business account and credit will come in handy. When you go to request a loan with nothing but your personal credit history, most lenders will require a personal guarantee. What does that mean? To secure the loan, you'll have to be willing to put your own personal assets on the line, such as your home, before the lender will agree to lend you the money. Now, best case scenario, your loan request is approved. In return, you put your house up as collateral, and everything works great. With this loan, your business can find its footing. But what about the alternate scenario? You know, the one where your loan request is approved, you put your house up as collateral, only this time, your business doesn't find its footing. Instead, it falters, leaving you unable to pay back said loan. And so what happens? Yes, you guessed it. You lose your home. So now, not only have you lost your home, but you are also likely thousands, maybe hundreds of thousands of dollars in debt. It's a business owner's nightmare. Separating your finances is only part of the equation. Just like you need to be responsible with your personal credit and pay your debts on time, the same applies to any credit cards you use for your business. Those debts need to be paid on time. Not doing so can lead to great financial distress. It reminds me of a 2016 story I read recently on thesimpledollar.com. In it, they interview a young entrepreneur named Sebastian, a 27-year-old marketing executive who had accumulated upwards of $75,000 in debt, largely because he did not separate his finances. Here he is, in his own words, sharing his story. When I tried to do a startup, my plan kind of blew up in the water, he says. The student debt added a huge amount of stress onto everything because it created a lot of questions like, is the startup the right decision? Why am I taking a risk when I already have a ton of debt to deal with? Because it took longer than expected to raise the capital he needed, he ended up initially placing business expenses on his credit card. And by not paying himself a salary for the business's sake, as the article put it, his personal expenses on the credit card ballooned, leading to $75,000 in personal debt. While this experience taught Sebastian many valuable lessons, and those lessons led him down a successful, albeit different path than he intended, as a result of these financial decisions, his startup faltered after less than a year. Now imagine if he hadn't racked up so much debt in both personal and business expenses on that credit card. Perhaps he could have managed his debt in such a way that his startup might still be in business. Now, all this time we've been talking about credit scores, but what exactly is a good credit score in business? You're probably already aware when it comes to your personal credit that anything in the upper 600 range and higher is considered anywhere from good to excellent. Is the same true for business credit? Well, yes and no. The concept is, of course, the same, as in you need to have the higher score in order to qualify for certain loans and to take advantage of low interest rates. But numerically, it looks a little different. Credit reporting agencies such as Dun & Bradstreet Paydex and IntelliScore Plus from Experian put business credit on a scale of 1 to 100, or in the case of FICO SBSS, 1 to 300. Other reporting agencies like Equifax's Small Business Credit Risk Score operates on a scale of 101 to 992. So while a score of around 75 or 80 to 100 is considered good as far as Dun & Bradstreet and Experian go, you'll need at least a credit score of 140 with FICO SBSS. But regardless of which credit reporting agency you follow to monitor your business's credit health, it remains your responsibility to keep that credit healthy. The good news is that once you take the business success assessment available on Dr. Martin's site at www.enjoyyourlegacy.com/business-credit, you will have access to a comprehensive business success and credit building system that will help you with all phases of obtaining what you need to build business credit and to maintain good business credit scores. So remember, when you're looking for ways to grow your business and you need that little extra financing to help you get over that threshold, you'll put yourself and your business in a much better position, financially and otherwise, if you establish a separate business account and credit scores. Maintain healthy business credit scores and use these to take out business loans while taking advantage of any low interest rates available to you. Spare yourself that tax time headache by keeping your personal and business finances separate. Don't make Sebastian's mistake and mix your personal and business expenses on the same credit card. And finally, make your payments on time every time, or at least as often as you possibly can. Think of your business credit score as like a lifeline for your business. If it falls, your business could fall with it. By managing your credit responsibly, by running a financially respected business, you can ensure that your business doesn't fall. but rather that it rises. Thank you for listening, everyone. Be sure to subscribe to this podcast or visit us at www.enjoyyourlegacy.com/Fiscally Fabulous Podcast to learn more. On behalf of Dr. Teresa R. Martin, Esquire, I'm Chrissy Bartles, reminding you to enjoy your legacy because you are fiscally fabulous.
This has been Fiscally Fabulous with Dr. Teresa R. Martin, Esquire. If you would like to learn more on how you can build generational wealth and leave a lasting legacy, go to www.enjoyyourlegacy.com and be sure to subscribe. Thank you for listening. Until next time.